So let's get started right away. Waaree Energies Limited IPO summary. We are going to discuss some key points. First and foremost, what does the company do? Company manufactures such solar modules. I'm sure you might have seen such solar modules maybe on your terraces. If you are staying in living in a bungalow as well, there are many people who are staying in bungalows and who actually set up such solar modules or panels on the rooftop. Definitely helps in reducing the carbon emissions, and it's a cost-effective, sustainable way to light up your house as well. My house is fully on solar, by the way. Okay, so it's a good thing to have. Initial capital investment definitely is there, but your payback period is also, I mean, the payback period is also not that high. Of course, depends on how much is your energy consumption, this that. But going back to Waaree Energies Limited, what does this company do? This company manufactures solar modules. Okay, if you remember, we had done one IPO which was about Premier Energies, and they mainly manufacture solar cell. These cells are fitted into this thing which is called as a module, and this is what Waaree manufacturers. Now, Waaree has India's largest aggregate installed capacity of 12 gigawatts as at 30th June. So big. So in short, they have such a huge installed capacity. Whatever modules they have, that they can generate a capacity of up to 12 gigawatts. Okay, they have plants in Chikli, Surat, Tumba, Nandigram, all in Gujarat, and also one facility in Uttar Pradesh. So total 5 solar module manufacturing facilities in India. And very interesting fact is that Waaree Energy subsidiary, which is Waaree Renewable Technologies, and Waaree Energy holds 74.46% in this company. And since listing, this company, their subsidiary, has given 61,500% returns. Okay, just only. Okay, so it will be interesting to watch. I'm not saying that Waaree Energies will give this crazy return, but just thought of sharing this as a fun fact. Okay, uh, is this industry looking very, very, very strong? Answer is obviously yes. The per capita electricity consumption is steadily increasing. It has already increased from 1010 kWh to 1331. Per capita consumption is expected to increase at 5 to 7% CAGR between 24 to 29. And overall, everyone understands this: rising income and EV adoption, rural electrification, all these things are going to increase the overall electricity consumption. And CRISIL expects per capita consumption to go to 1,600 to 1,650 kWh by 2029. So more consumption is equal to more demand and is equal to a better situation for companies like Waaree Energy. Now, next, what is India expected to do? So, is the company good? Are the financials good? We have not yet discussed about this, but is the industry looking very strong? Strong headwinds for the industry? Yes. What about economy level? Economy level, India is forecasted to double its renewable power capacity over 2022 to 2027, with solar overall PV accounting for 75% of this growth. So let us say currently we are at 100 and we plan to go from 100 to 200. This extra 100 plus 75% will be fueled by solar. So is this going to be a very good news for the entire solar space? Answer is obviously yes. On top of that, there were certain countries who were imposing restrictions on import from China, typically regarding solar modules, and that is the reason why you'll see here that from India, the export of cells and modules shot up like anything. This is the year 23, 24, both these years where many countries stopped importing a lot from China, the whole cells and modules. But of course, we are still so much dependent on China for raw material. We'll understand that in the subsequent slides. Is there a big drop here? No, this is just Q1. So even if we take this to 450, one quarter is 450. So all 4 quarters put together, they should take it to again 1800 plus levels. So with even the import restrictions easing out, still we should be able to go close to FY24 at the industry level. This is about $1 million exports of cells, solar cells, and solar modules. All in all, if you now focus on the company analysis, EBITDA margin definitely improving from 6.88% to 15.56%. Steadily it has increased. Debt to equity ratio is under control. Average ROC is good enough. PAT margin is continuously increasing. Here you can see that capacity in gigawatts as at 31st March 2024 is 12 gigawatts. And their order book is almost of 20 gigawatts. So what is the scenario? Their capacity is only of 12, but they have an order of 20. So there is a shortfall of 8 gigawatts. How are they planning to bridge this gap? You'll get the answer in the coming 1 or 2 minutes. But before that, you can see the financials as well. Financials are pretty much nice. Revenues continuously increasing, EBITDA is increasing, PAT is increasing. All in all, good numbers, good financial numbers. You can also see the PAT margin is also increasing. Or just in case if you're not sure about how to calculate these CAGR numbers, I'm just going to quickly tell you how to view these CAGR numbers. This is the financial calculators tab. Okay, so for example, if you want to check from 796 to 12743, 796 12743 CAGR calculator, I forgot. 796 to, I think it was 12743 in a matter of 2 years. If I say calculate, so there, this is the CAGR that you get. Okay, so all in all, CAGR is also very good. 300% CAGR. So from 800 million to 5,000 million to 12,743 million has been overall great, right? Financials look good. Any risk? Yes. Company has been awarded with the PLI scheme, under which they have been awarded an amount of 19,232. But what was the condition? The condition was that they had to complete a facility by April 2025. And the management is very clear. They have mentioned that we'll not be able to complete it by April 2025. The project may take up to 2027 to get this completed. But in that case, is that going to be a violation of one of the conditions in the PLI scheme? Answer is yes. Management mentions that they have requested for an extension of 24 months. They have requested, but they are not sure whether it will be agreed upon or not. A failure on agreement by, if the government denies this request, what could happen? They could get a reduced PLI incentive or even disqualify. Could that be a risk? Yes. See, look at the risk that I was talking about. Imported material from China, raw material, 54% of the raw material is imported from China. 87% of the raw material is imported from top 3 import jurisdictions. So you can imagine if the geopolitical tensions increase, can this be a big risk for the company? Can this be a decent enough risk for the company? Yes. Okay. Majority revenue is coming from Gujarat. Top 5 states contribute to 84%. I don't perceive this as a very big risk though. Litigations, not much. Peer comparison, Websol is in losses, so not a big deal comparing it. Premier Energy is in profits, but look at the income level. Income for Premier is 31,000 million. This is at 1,16,000 million. This is 7 EPS. This is 48 EPS. This is a PE of 151. And what is the PE that this company is demanding? Closer to 151? Answer is no. They're demanding a PE of just 31. Very interesting PE. Very, very nice value. Feels that they have given a very, very, very nice valuation, right? What are they going to do with this money? 4,300 total issue, out of which fresh issue is 3,600. What are they going to do with this? They're going to set up a new plant, and which will ensure that additional 6 gigawatts of capacity is enhanced. If you remember, the existing installed capacity was 12 gigawatts. The orders in hand were of 20 gigawatts. The gap was of 8 gigawatts. Out of it, 6 gigawatts gap is going to be filled right away with the IPO. So very, very, very interesting IPO. I am really looking forward for this. This issue is going to open on 21st. Will be available till 23rd, and looks pretty interesting, right? So I hope you enjoyed this short and sweet summary of Waaree Energy.